We recently released a report containing our long-term forecast once more, and while the numbers have increased significantly, we still believe it is incredibly undervalued. The reason for this is that two of the assumptions from the previous reports have changed. One was our bull case for Tesla, which in our previous model predicted that it would lose a third of its 177% global market share in 2018, including China as the Tesla killers entered the market. This isn't your typical stock market prediction. This is a historic event that could change the game forever in a world where dreams are dashed and fortunes are made. Audi, Porsche, Taycan, Jaguar, and others are excited as we prepare to reveal the closely held secret that investors have. He's been clamoring for when to buy Tesla stock and ride the rocket to millions. But wait, there's a twist to this tale, a hint of mystery, a dash of suspense, and an intensity that will keep you on the edge of your seats. The date that Cathie Wood, the Wall Street Oracle, has in her possession might lead to unimaginable fortune. Therefore, everyone is wondering what it is. How can you take advantage of this fantastic chance to earn millions of dollars? But before we pass away, dive headfirst into this mystery. Let's quickly glance at what lies ahead as we explore the secrets surrounding Tesla stock. Examine its astounding growth, put on your seatbelts, and analyze this high stakes. Aim to uncover the potential of artificial intelligence to propel Tesla to new heights. Greetings, viewers, as we set out to explore the core of the stock market where there are enormous stakes. This is a story you won't want to miss because of the genuine suspense and endless rewards, but before we go any further, please show your support by liking this video and subscribing to Tesla Stock News. Without further ado, let's get this video started. Traditional internal combustion engine cars are rapidly being replaced by electric vehicles, a trend that is picking up steam. There is a commitment to making electric vehicles lucrative, while some voices argue that businesses should focus only on the internal combustion engine market since it offers greater profitability. Venture, it is imperative to emphasize that Tesla's approach of reducing prices while retaining production capacity is a formidable obstacle for others. To emulate it is a feat that may prove unattainable for others. It's critical to realize that advising Ford to stick with internal combustion engines and adopting a short-term viewpoint is not the best course of action. The truth is that they have no choice but to keep moving in the direction of electric and autonomous vehicles, or else they run the risk of going out of business, due in large part to the fact that electric vehicles have much lower maintenance costs than their gasoline-powered counterparts. Companies such as hers are expanding their fleets of electric vehicles, reflecting the growing demand for these vehicles and the noticeable increase in their addition to corporate fleets. The overall number of electric vehicles on the road is increasing more quickly than the initial transition to electric vehicles. Let's look at some statistics from the past month. Auto sales have shown a significant upside surprise, surpassing expectations by reaching 15.9 million units, against an anticipated 14.8 million units. This scenario opens up the possibility that energy companies will reevaluate their investments in the fossil fuel ecosystem, leading to potential volatility in oil prices. This volatility may manifest as lower highs and lower lows, but it should not be misconstrued as a signal of inflation. This strong auto sales performance can be ascribed to various variables. First of all, despite economic fluctuations, consumer confidence has remained remarkably stable. Secondly, manufacturers have continued to adjust to changing consumer preferences, with many focusing on producing more environmentally friendly and fuel-efficient vehicles. However, it's worth considering whether this increase in demand is due to dealer inventory building up or pent-up demand following supply chain disruptions. These questions will soon be answered. Given Tesla's recent move to modify its auto prices, there is some doubt currently. Is the reason for the price reductions attributed to a decline in demand? According to Tesla, it prices its cars strategically to maintain full production capacity. Even with these price reductions, Tesla's margins are still higher than Ford and GM's, so this isn't necessarily a sign of weakness, but rather a calculated move to keep the production lines operating smoothly. This pricing strategy sets Tesla apart from its rivals. In 2023, Tesla emerged as a dazzling star and won my favor. It's remarkable. Ascent, soaring by an impressive 15% within a mere 6 months, marked a stark contrast to its lackluster performance in 2022. This resurgence, with Tesla stock surging over 150% in just half a year, has left investors, both retail and hedge funds alike, exhilarated, including me. However, the past 30 days have witnessed a downturn in Tesla's stock price, with a precipitous decline of approximately 25%. This recent slide may come as An unexpected jolt to investors who have been riding the electric vehicle and battery manufacturers' wave of success throughout the year. After all, up until July 18th, Tesla shares had skyrocketed by an astounding 170% year to date in 2023, but the tide began to turn for Tesla around that time. It's worth noting that it's still early days with only a month of decline to assess. Nevertheless, since July 17th, Elon Musk's company has been steadily shedding its market value, shedding over 23% from its peak, which reached nearly $290 per share. In fact, as of last night, TTLA stock closed at approximately $225 per share, marking its lowest price point since early June, just 2 months prior. However, there's no cause for excessive concern as Tesla had an exceptional first half of the year, surging by over 170%. Tesla's effective cost is one important component that enables them to maintain lower costs. Contrary to gas-powered vehicles, which have reached a mature stage and are no longer experiencing such cost reductions, management in electric drivetrain technology has seen an impressive 28% decrease in production costs for every doubling of cumulative unit costs. This has left them unable to match Tesla's pricing strategy, placing significant pressure on their profit margins. An interesting development occurred during Ford's most recent earnings call when they revealed that their electric vehicle division is expected to lose $3 billion in earnings this year. In contrast, their internal combustion engine cars are expected to generate a positive earnings per share EBITDA of $7 billion, mainly due to their truck segment, which is expected to earn $6 billion. This revelation sparked an intriguing viewpoint that was discussed during our brainstorming session. By disclosing these financial figures, Ford is essentially outsourcing its corporate strategy to its shareholders. The numbers suggest that Ford is inclined to prioritize profitability in the production of electric vehicles while simultaneously focusing on the more lucrative internal combustion the engine market. It remains to be seen, though, whether Ford can successfully replicate Tesla's strategies for investors pondering their next move. Is this a fantastic opportunity for the biggest manufacturer in the world to buy the dip? It's important to remember that historically the majority of drops in Tesla's stock have turned out to be favorable times to buy. Examples of these include Cathie, who purposefully bought Tesla stock in 2022 and this year during 10% or even 20% declines before, selling it when the price rose by 20%. Many people, including myself, have followed suit, taking advantage of the opportunity to purchase when Tesla stock saw a 20% decline. However, it's important to understand that past performance does not guarantee future results, a fundamental principle we all acknowledge, despite the fact that investors in Tesla stock have an unbroken track record of profits. If you need proof, just glance at this graph, which demonstrates the point. For the time being, let's put the specific stock prices aside and concentrate on the pattern of the graph. The mountain-like shape represents the fact that even in the difficult times of 2022, whenever Tesla stock fell, it eventually rose again. This pattern persisted into 2023, when Tesla's stock hit its lowest point in January and then started its upward journey, rising further in February, experiencing a brief dip in May before seeing a significant rise in June and reaching even greater heights in July. The lesson from this is that throughout its history, buying the dip in Tesla's stock has consistently proven to be a highly profitable strategy. With that understood, let's get into the urgent question that has been on everyone's. To summarize, the majority of Tesla investors are probably well-versed on the business's incredible development trajectory. We talked about how Tesla skillfully managed its growth trajectory earlier this month, going from producing 350,000 cars in 2019 to an astounding 1.3 million delivered in 2022. This was a fantastic accomplishment, even though it fell just shy of the 1.5 million target. Aim for a 50% increase per year. Elon Musk has stated time and time again that he expects this growth to continue. What is unclear, though, is whether Tesla can realistically maintain a 50% growth rate year over year for the next 5 years or even a decade. Wow. Many investors would argue that it is feasible in the short term. It is important to realize that a large portion of Tesla's success and potential is already baked into the price of the company's stock. At the moment, Tesla boasts a high price-to-earnings ratio of 64, which is significantly higher than that of industry peers like Toyota P of 10.6 and General Motors 4.5. While Tesla is still working toward achieving its lofty objectives, Toyota has already accomplished a number of historical firsts. That being said, it's important to keep in mind that Tesla has promises for the future that go beyond the company's ability to deliver cars. Elon Musk has highlighted the company's commitment to fully autonomous driving as well as recent advancements in artificial intelligence. A tweet from someone who first questioned Tesla's full self driving capability but has since experienced Tesla driving them around San Francisco using computer vision brought attention to this progress. The potential of the enterprise is further shown by Elon Musk's response to a tweet that hinted at improvements in artificial general intelligence. In conclusion, the decision to invest in Tesla at this time requires a leap of faith in the company's future potential, even though its current P ratio is high. AGI represents a significant milestone, and while it may be somewhat unsettling, it suggests a future where AI technology can tackle challenges that humans can solve. The company may yet have opportunity for significant expansion as evidenced by its lofty aims and recent advancements in AI. Remember that Tesla's journey is far from done, and it's an interesting space to monitor. In this segment, we've dug into the fascinating world of Tesla stock, starting with the question of whether it's time to buy the drop in the biggest automaker in the world. Although it fell just short of the 1.5 million target, Tesla has a history of impressive growth, scaling from 350,000 vehicles in 2019 to 1.3 million in 2022. However, it is unclear whether it can sustain such rapid growth in the long run. We examined the significance of Tesla's high price to earnings P ratio by comparing it to industry titans like Toyota and General Motors. An alluring image of Tesla's future potential is painted by its dedication to fully autonomous driving and advancements in artificial intelligence. The company's trajectory is underlined by the recent advancements in AI, as mentioned in a tweet. Do you believe Tesla will be able to sustain its remarkable 50% annual growth rate going forward? Regarding Tesla's current high price to earnings ratio in comparison to industry peers, what are your thoughts? How much do the latest AI developments improve Tesla's prospects? And would you finally consider purchasing Tesla stock at the lower price? At this time, we ask that you support us by liking this video and subscribing to Tesla Hype if you found this debate to be insightful and thought-provoking. Thank you for watching, and we hope to see you in our future films.